Good afternoon to everyone. And the subject we have today does not have too many answers, but there are sometimes more questions and we have to find the answers. And that's where we all are as professionals advising clients. And of course, someday also representing them before the authorities as well as before the tribunals. Uh, I will share my screen. So what we are going to do, we're going to first look at how the taxation of software has evolved. And we will have to go back into history, go back a few decades, maybe in 1960s and 70s, and look at what happened under the VAT laws. Then we will come to the amendment to the Constitution, how the Constitution was amended when we went to the GST law. We will look at the entries in the notifications under the GST law, and there are some specific uh, SAC codes or HSNs which are creating some element of doubt and conflict. We'll also have a look at those before we try and at least gain an understanding on how softwares have to be taxed. Well, the first aspect which I need to, what I plan to do with you is take the next about 30 minutes or probably just around 30 minutes to give you this brief introduction and background. After we have completed that, we will go on to the case studies. Of course, we'll get a lot of pointers when we discuss the background and the evolution of the tax structure. And then when we go into the case studies, we'll take up the case studies one by one, and we'll also have some time for Q&A according to what Atul Bhai decides. The first is, of course, we're looking at, again, we're talking about history, and you can see the slide number 3. We're talking about the taxing power of the states. And once upon a time, we had the 7th schedule list 2, which said, and I'm reading the first bullet point, taxes on the sale or purchases of goods other than newspapers subject to provisions of 92A of list 1. And here you please mark the word goods. And that is how the states were empowered to levy tax on supply of goods or sale of goods at the relevant time. We also have the union list, which was list 1 of the 7th schedule, which had 92C, which is to tax services. Of course, we all are aware that the entry 92C was never notified, never brought into force, and therefore service tax was really levied under the residuary entry 97. It says all other matters not enumerated in list 2 or list 3, including any tax not mentioned in either of those lists. So that is how the service tax law got enacted, and the levy was in force under this particular entry. But here when we talk about the first entry, we're talking about goods again, which is entry 54. We have a definition in the Constitution. As you're aware, Article 366 in the Constitution is the definitions clause. Subclause 12 is the definition of goods, and this is the way it reads. It says goods includes all materials, commodities, and articles. And therefore, the first issue which we had was that when it comes to taxation of goods, at the relevant time, of course, in 1950s and 1960s, we never had service tax, so we never had to worry about taxation of services. But within the realm of taxation of goods, the question always was, what do you mean by goods? There were a few commodities at the relevant time which created doubt whether these are goods, whether these are services, or these are not goods at the relevant time, at least for the purpose of levy of tax. And if I may say, the first decision on this, a very old decision, was by the Supreme Court in the case of MP Electricity Board. And the question was that is electricity goods? The Supreme Court said yes, electricity is goods. And I would like to share with you what the Supreme Court has said. We will have to read a few passages, but it is interesting to read this because it really tells us how you have to interpret the meaning of the word goods in the Constitution and various taxing entries throughout the Constitution. So here's the way it said. It says the term movable property. Now, while the Constitution defined goods, the sales tax laws defined goods means all kinds of movable property, and that is how the the Supreme Court in the case of MP Electricity Board was concerned with the words movable property. It says the term movable property, when considered with reference to goods, cannot be taken in a narrow sense, and merely because electric energy is not tangible, or cannot be moved or touched, it cannot cease to be movable property when it has all the attributes of such property. It is capable of abstraction, consumption, and use. It can be transmitted, transferred, delivered, stored, possessed, etc. in the same way as any other movable property. So here are this was perhaps the first time when the Supreme Court told us that you look at certain attributes, and what those attributes are: abstraction, consumption, use, transmission, transfer, delivery, storage, possession. All of this are the attributes which will help you determine whether something is goods or not. Of course, that also meant there was also a very important finding in this decision. It said that goods need not be tangible. They may not be moved, they may not be touched, but that does not mean that such property is not goods. Even though they are intangible, they may still continue to be in the nature of goods. A much later decision was by the Supreme Court in the case of Vikas Sales. Slightly long paragraph, but again very valuable. This was in the context of REP licenses. And what the Supreme Court said: REP licenses are goods because they have their own inherent value, and therefore these can be subjected to the levy of sales tax at the relevant time or value-added tax when they are bought and sold. This is what the Supreme Court said. REP licenses have their own value. They are bought and sold as such. The original licensee or purchaser is not bound to import the goods permissible thereunder. He can simply sell it to another, and that another to yet another person. In other words, these licenses or exempt scripts have an inherent value of their own and are traded as such. They are treated and dealt with in the commercial world as merchandise, as goods. It has a value of its own. It is by itself property, and it is for this reason that it is freely bought and sold in the market. For all purposes and intents, it is goods. Unrelated to the goods which can be imported on this basis, it commands a value and is traded as such. This is because it enables the holder to import goods which he cannot do otherwise. So this is the way in Supreme Court in Vikas Sales eventually said licenses, exempt scripts are in the nature of goods. They can be freely bought and sold. They can be owned, and therefore they can be subjected to value-added tax or sales tax when they're bought and sold. And look, taking some of these decisions, of course, Vikas Sales came much later, but at least taking the decision of the MP Electricity Board at some point in time, and I remember this was sometime in 1985, in 1993, when the first time the taxation of softwares was being contemplated. And the question before the states was, how do we classify softwares? And see how they classified this. They put an entry, and I'm showing you the new entry under the VAT law. There was a very similar entry under the Bombay Sales Tax Act, which was in force up to 2005. But for the sake of ease of interpretation or ease of at least reference, we're just going to look at the VAT entries. They had a Schedule C, and entry 39 spoke of goods of intangible or incorporeal nature, as may be notified from time to time by the state government in the official gazette. And they notified a list over here, and you can see how it says. It says serial number and name of the goods of intangible or incorporeal nature. There was patents, there were trademarks, there were import licenses, export permits, licenses and quotas, and there was software packages. So here was perhaps the first time, and as I was saying, 1993, when the Bombay Sales Tax Act, and I think across India, I believe Maharashtra was the first state to levy tax on softwares. Under the Bombay Sales Tax Act also in 1993, they had introduced this under a separate schedule. It was called C1, which was also said goods of intangible or incorporeal character. And then they defined three at the relevant time: patents, trademarks, and software packages. So the most important element which I wanted to share with you is that we have gone ahead and defined these, or the states have gone ahead and defined this as intangible goods, as incorporeal goods, and not as tangible goods. To that extent, this has been accepted by the states that these are intangible character or goods of intangible character. I'm going to jump a bit. Let's go and see one more decision, and we'll have to see about 3 or 4 decisions before we can come to some kind of a conclusion. We're going to see a slightly different decision of the Supreme Court in the case of ACC. It was under the customs law, in a way not related to VAT or sales tax, but there was a situation where certain drawings, certain designs were imported. They were put on CDs or floppy disk, and when they were imported, the bill of entry had to be filed. The importers filed a bill of entry and declared the value of the CD or the floppy drive at $1 to say this was the value of the goods and we are happy to pay custom duty on this. The customs department said no, these contain certain drawings, these contain certain designs on which you have paid taxes, or sorry, for which you have paid to the supplier, and therefore when you're leaving for computing the custom duty, we should also include therein the value of the designs and the drawings which you're paying to your supplier. And this is what the Supreme Court said. It is true that what the appellants had wanted was technical advice or information technology. Payment was to be made for this intangible asset. But the moment the information or advice was put on a media, whether paper or diskettes or any other thing, then what is supplied becomes chattel. It is in respect of the drawings and designs, etc., which are received, that payment is made to the foreign collaborators. It is these papers or diskettes, etc., containing the technological advice which are paid for and used. The foreign collaborators part with them in lieu of money. It is therefore sold by them as chattel for use by the Indian importer. The drawings, designs, manuals, etc., so received are goods on which customs duty could be levied. And therefore they said that if, although the value of your CD or diskette was say $1, if you had paid $10,000 for the designs, drawings or manuals, then you have to add the value of that $10,000 also to the value of the diskette, and the value of the disk becomes 10,000 plus $1, which is $10,001. In a way, very important, it said any information or advice put on media becomes goods. It's therefore anything which is intangible, if it is put on any media, then it becomes goods. That was the conclusion of the Supreme Court. Of course, we bear in mind that this was in the context of the customs law, and therefore under the customs law, the question was obviously to value the CD or the diskette which was coming in for the payment of customs duty. This decision was extensively followed by the Supreme Court subsequently, and I think the final, I would say, interpretation on software was by the Supreme Court in TCS's case. This is a slightly larger uh, passage. I'd like to refer to a few paragraphs, and therefore I would request you to bear with me. In India, the test to determine whether a property is goods for the purpose of sales tax is not whether the property is tangible or intangible or incorporeal. The test is whether the concerned item is capable of abstraction, consumption, and use, and whether it can be transmitted, transferred, delivered, stored, possessed, etc. Admittedly, in the case of software, both canned and uncanned, all these are possible. In a way, they really went back to MP Electricity Board and they said, again, the same attributes, and therefore they said these are goods, and therefore they can be subjected to sales tax. The next paragraph is important. In our view, the words goods as used in Article 366(12), and here now they are now interpreting the meaning of the words goods under the Constitution. So, in our view, the term goods as used in Article 366(12) of the Constitution of India as defined under the said Act are very wide and include all types of movable properties, whether those properties be tangible or intangible. A software program may consist of various commands which enable the computer to perform a designated task. The copyright in that program may remain with the originator of the program, but the moment copies are made and marketed, it becomes goods which are susceptible to sales tax. What the buyer purchases and pays for is not the disc or the CD. As in the case of paintings or books or music or films, the buyer is purchasing the intellectual property and not the media, that is the paper or the cassette or a disc or CD. Thus, a transaction of sale of computer software is clearly a sale of goods within the meaning of the term as defined under the said Act. The term all materials, articles, and commodities includes both tangible and intangible / incorporeal property, which is capable of abstraction, consumption, and use which can be transmitted, transferred, delivered, stored, possessed, etc. The software programs have all these attributes. And therefore, this was how we concluded that softwares are goods. After this decision, we accepted that softwares have to be subjected to sales tax and value-added tax. Of course, there was a passage in the same decision which talked about customized software, and therefore that question of whether customized softwares are goods or not was left open. But then we are not really concerned about that too much. Broadly, we accepted that softwares are goods. And the more important element which we need to bear in mind, as we all accepted, that softwares are goods of intangible and incorporeal character, that they are not tangible goods, they're intangible goods. Let's move on to what happened in the Constitution when we had to introduce the GST law. You're aware we made certain changes. The first was we introduced Article 246A, which allowed the states to levy tax. And that is what this Article 246A says, special provision in respect of to goods and services tax. I'll just read out 3 lines. Notwithstanding anything contained in Articles 246 and 254, Parliament, and subject to Clause 2, the legislature of every state have power to make laws in respect of goods and services tax imposed by the Union or by such state. And therefore here mark the words goods and services tax. 366(12)A, we introduced a new clause in the definitions. We said goods and services tax means any tax on the supply of goods or services or both, except taxes on the supply of alcoholic liquor for human consumption. We are not concerned with the latter part. Of course, that means here we need to only look at tax on the supply of goods or services or both. Now please mark this. It says goods or services or both. So there is something called goods, there is something called services, and there's something called both as well. Of course, you will not find any provision in relation to both under the GST law, but we do find certain provisions in relation to goods or services under the GST law as we see today. Let's move a bit further. The definitions, as I said, was amended to introduce the meaning of the word goods and services tax. In the meantime, the definition of goods, which is on your screen, includes all materials, commodities, and articles, was unchanged. We have not touched that at all. It remains the same as it was when MP Electricity Board decision was given, when TCS decision was given, and therefore that decision remains the same as it is. Services is some sort of a residuary definition, clause 26A under 366. It says services means other than goods. That means if it does not fall under goods, then it becomes services. Now this is where the catch is going to be, that looking at this 366(12), which is the definition of goods, our Supreme Court has already concluded that software packages, at least in relation to software packages or canned software, they are goods. Our Supreme Court has also said and held that these are intangible goods. And this is where we create a little bit of a problem to say how do we really deal with these under the GST law. With this, I come to the GST law, and we always look at the definition of supply. Whenever we are concerned with the taxation of any transaction, we look at what is the meaning of supply. Does the transaction qualify as supply or not? And thereafter we immediately look at whether if there is a supply, whether that supply is a supply of goods or a supply of services. And why do we need to see that? Because of various provisions which apply to us in relation to registrations, in relation to composition, in relation to place of supply, in relation to time of supply, exports and imports, supplies through agents. All of these are different when you're dealing in goods or you're dealing in services. And of course, there are a few more which we will also talk about in the as we go ahead. And therefore, these are going to be relevant for us to really decide that if any of us or our clients are going to supply the software, are these in the nature of goods or services, and which provision should we really apply? Of course, when you look at the definition of goods, it is very much similar to what it was under the sales tax or the VAT laws. Not much difference. It says good means every kind of movable property other than money and securities, but includes actionable claims, growing crops, and so on and so forth. The latter part is not relevant for us. Therefore, it says goods means every kind of movable property, And we saw goods under constitution and goods similarly worded under the sales tax law or VAT law have already been interpreted by the Supreme Court. Services again is a residuary definition. It says services means anything other than goods, money and securities, but includes activities relating to use of money or its conversion. Again, the latter part is not relevant. For our purposes, what is relevant is only to say services mean anything other than goods. When we look at the further provisions, and we did look at supply. After we look at supply, we go to Schedule 2 for the classification between goods or services, and there are some further clauses within Schedule 2. Clause 5 or para 5 of Schedule 2 give us a list of supply of services. And what are these? Whatever is relevant for us has been reproduced. Clause C of para 5, which says temporary transfer or permitting the use or enjoyment of any intellectual property right. Now, intellectual property right will also include softwares. So that is going to be in the nature of services. Development, design, programming, customization, adaptation, upgradation, enhancement, implementation of information technology software is in the nature of a service. And I don't think we'll have too much of a challenge over here because we have understood and dealt with these as services under the service tax law as well. F talks about the transfer of the right to use any goods for any purpose, whether or not for a specified period, for cash, deferred payment, or any other valuable consideration. It is picked up from 366(29)(a), which was once upon a time deemed to be a transaction of sales. Now it has been said that these are transactions of services only. So these are again the three different clauses which are relevant for us when we talk about the supply of software. I'm going to take you through a little more in detail, and we're going to now drill down into the GST law. This is a little difficult to follow. It's also a little difficult to explain. So maybe you need to focus a little more. I'll try and go as slow as I can so that you don't lose track. When we look at the notifications, we have the notifications relating to the rate of tax on goods. We have the notification in relation to the rate of tax of services. And see what we have. We have notification 1 by 2017, which is the goods notification. And if you see, you have over here entry to 452P, and it says permanent transfer of intellectual property right in respect of information technology software. 9% is CGST rate, 9% is SGST rate. Services have a similar entry, heading 9973, which says temporary or permanent transfer or permitting the use or enjoyment of intellectual property right in respect of information technology software. That's also 9%. So rate is not a problem. We are at par. Both are going to be taxable at the rate of 9%. The difference is we may agree that temporary transfer, like we saw in the previous slide, temporary transfer or use of enjoyment of temporary transfer or permitting the use or enjoyment of intellectual property is a service. So we are fine with we are fine with temporary transfer. We are also fine with use or enjoyment of intellectual property. But here the words permanent transfer now are creating a little bit of a problem. We have the word permanent transfer also in the definition, in the notification relating to goods. The words permanent transfer is also in the definition, in the notification relating to services. And therefore, when we really put all of this together, read with Schedule 5, this is what we really end up having. You look at the word software, there could be different kinds. There could be design and development or customization or upgradation of software. There could be a permanent transfer. There could be a temporary transfer or a permissive use, which is permitting the use or enjoyment. There could be licenses or end user licenses. I think we will all be quite fine to interpret to say the design and development of a software is going to be in the nature of in the nature of services, and there is no challenge over here at all. However, under the notification, you see permanent transfer is defined as goods as well as services, and that's where we will have a challenge on interpretation to say what do we really define this as, which provisions do we really apply to conclude what these should be treated as. Temporary transfer or permissive use may be in the nature of a license, in the nature of a lease, will be in the nature of services. Again, we may not have too much of a challenge. It is really picking up from what we understood once upon a time under Article 366(29)(a), and therefore that should not be too much of a dispute or a debate with the department. But end user licenses are creating a problem. Now, obviously, the question is, what is the meaning of end user licenses, and how do you really treat these to be? End user licenses are those licenses or those agreements on which you simply click I agree every time you log on to a website, every time you download a software or some information or material. And that's what is called an end user licenses. You're agreeing to certain terms of use, you're agreeing to certain restrictions, and you're agreeing to certain obligations which you have as a user. Now, having come here, let's go a little step further and really see how the GST Council also recognized that there was a problem in the taxation of software. They realized that this entry of permanent transfers, when it was really classifying or falling under both the entries, would create a problem, and therefore in a press release on 10th of November 2017, they said, this is what they said: in order to obviate dispute and litigation, it is proposed that irrespective of whether permanent transfer of intellectual property is a supply of service of goods or service, one I will ignore, two, permanent transfer of intellectual property in respect of information technology software attracts GST at the rate of 18%. So it is in November 2017 where they aligned the entries. They put in the words permanent transfer in both the notifications, which is notification number 1 and 11 of goods and services, and they aligned the rate at 18%. And they said, in a way, they as good as said that we don't know whether these are goods or services. One person may say it is goods, one other may say it is services. One court might hold that it is goods, someone might say it is services, and therefore we'll say it is taxable at 18%. But I believe that does not solve your problem, because although you know that the rate of tax is 18%, that's not the end of the matter. There are so many other provisions, there are so many other clauses which are going to be impacting, or which have to be, I would say, invoked depending upon whether these are goods or whether these are in the nature of services. Keeping this aside, let's also look at an FAQ on ITes. What did the FAQ say? There was one question which says, question 18, when would it be construed that I have made a supply of services involving temporary transfer or permitting the use or enjoyment of any intellectual property right? Answer: generally, the end user license agreement (EULA) is a legal contract between a software application author or publisher and the user of that application governing the usage. The agreement is renewable and or could be amended from time to time. To find out as to whether there is an element of supply involved when when software is delivered to its customer, the terms and conditions of EULA are material. The contract for supply therefore assumes significance in this test to decide whether or not there has been temporary transfer or permitting the use or enjoyment of any intellectual property right. So again, now we have really gone and muddled the whole discussion. And just to recap a little bit, we said that the Supreme Court has said the softwares are goods. The Supreme Court has said that softwares are copyrighted articles in a way, when they give that example of a CD, of a book, of a music cassette, and they said that these can be bought, sold, owned, and therefore these are in the nature of goods. It also said these are intangibles, and these are going to be therefore in the nature of intangible goods, which should be treated as such. But here, when we went to an end user license, you have started creating a little bit of a challenge to say that in an end user license, when you are having a license, is it always in the nature of goods or services? You have now opened up the whole Pandora's box to really decide how you should treat this. Of course, you created a contrary issue when it came to permanent transfers. And though acknowledging that permanent transfers should be always supply of goods, you also said we don't know whether this is supply of goods or services, but the rate is 18%. And we leave everything else to the courts to decide, or maybe for consultants to decide how you want to tax this. With this, I'm going to now take you to the next element of the notification. We are going one step deeper now into the notification 11. And very notification 11, as you saw in the table which I had earlier shown you, and I can take you back to that table, that slide 15. In notification 11, you can see down below the heading is 9973, which is talking about temporary transfer or temporary or permanent transfer of permitting the right, use or enjoyment of intellectual property in respect of softwares. Let's go a little deeper now, see how the whole story changes for us. You look at the notification. In the notification, while you saw the entry, there is an explanation. There is an explanation 2 at the end of the notification. It says a reference to chapter, section or heading, wherever they occur, unless the context otherwise requires, shall mean respectively the chapter, heading, section and heading in the annexed scheme of classification of service, annexure. So you remember that to the notification there was an annexure which was attached, and they said for more details you can refer to the annexure on how the classification of the services are to be made. And this is what the annexure really said. The group 99733, which was there in the annexure, it says licensing services for the right to use intellectual property and similar products. And 997331, licensing services for the right to use computer software and databases. And this is where we'll be concerned about. So eventually from 9973 we go all the way to 9973 sub entry 31. You also remember that there was an explanatory note. They issued an explanatory note. They said this explanatory note will be of use. This was based on the international classification, and there we find the whole issue is presented in a very different way. If you go to the explanatory note, and I'm going to 9973, if I may just step back, you can see here 9973, and we are still saying this is there in the annexure. From there we go to the explanatory note and we start again from 9973, and it says licensing services for the right to use intellectual property and similar product. I'm sorry, we'll have to read this a bit and focus on this as well. This group includes permitting, granting or otherwise authorizing the use of intellectual property products and similar services. Note, this covers rights to exploit these products such as licensing to third parties, reproducing and publishing software, books, etc., using patented designs in production processes to produce new goods and so on. Limited end user licenses which are sold as part of a product, example, packaged software, books, are not included here. This group does not include license fees as integral part of consumer goods, example, end user licenses for books, records, software. So in a way, if you look at the explanatory note, and this is again based on the international classification, it seems to suggest, or it suggests, that the softwares which are sold for end use or to the end user are not falling under 99733. Only when the software is supplied to someone else for further exploiting meaning making copies and selling further, maybe distributing further, or using one software to develop another software, or incorporating or embedding one software into another software, only that are the licenses, or those kind of activities are those which are intended to be covered under 9973 or 99733, and not when you're giving to an end user. So a Microsoft, a Word, an MS Office which you buy does not appear from this explanatory note to be covered within the definition of 99733. If you go further, and as you remember, under 99733 there is 3.1 also, which is the final sub-entry which says licensing services for the right to use computer software and databases. See how it explains. This service code includes licensing services for the right to reproduce, distribute, or incorporate computer programs, program description, and supporting materials for both systems and application software. It applies to various levels of licensing rights, such as rights to reproduce and distribute the software, rights to use software components for the creation of and inclusion in other software products. The second part was in relation to databases. I've ignored it. And it goes further. There's a note below which says this service code does not include package, non-customized software/database, limited end user license as part of software package, and licensing services for right to use database software, which is again database software we are not focusing immediately. So again, we are coming to this, which seems to indicate that the government says, go to the notification, go to the annexure, go to the explanatory note. The explanatory note seems to suggest that 9973 does not include the simple software which are sold on a day-to-day basis. Therefore, a business entity buying software or SAP licenses for its end use perhaps or should not fall under this particular entry, which is the temporary transfer or permitting the use of software, or it should not fall, or that clarification of EULA under the FAQ should not apply to this particular kind of software. This only applies to, as I said, to replicators who replicate, who distribute, who use one software to create other softwares, and who are actually using it for the business purposes to create new products and services. So I think this is an interesting element which we need to really bear in mind. Let's go a little further. We have a very old decision of Infosys of the Madras High Court. And what, again, the whole dispute was licenses and goods. And at that point in time in Tamil Nadu, the rate of tax on software was 4%. Rate of tax on licenses for software was 12.5%. So obviously the assessing authority says whatever software you are selling is nothing but licenses, and therefore you should have paid 12.5% and not 4%. And this is what the Supreme Court said, the Madras High Court said. When the license is given, it restricts the use and transfer of information. But here the goods are sold without any restrictions. These were in the case of Finacle software, which Infosys made for banks. And here it says, here the goods are sold without any restriction to the use. The sale of software needs to be examined whether the software is sold with restriction, which protects only the IP rights, or it is sold putting restriction on the use itself. This would decide whether there is a sale of software or a sale of license to use of software. The above discussion indicates, the above discussion was in relation to how the Finacle software was used by banks. It says the above discussion indicates that in the instant case, the software is sold without putting any restriction to its use by the vendee banks. But restrictions are intended only to protect the IPR rights. And therefore they said, although you're calling it an end user license or a user license, these are nothing but sale of software, because ultimately to the banks you're providing the copy of the software. The banks will own it, they will use it according to their requirements. On the other hand, from a service tax angle, we have a very different decision of, again, the Madras High Court, Infotech Software Dealers Association. This was when the entry of service tax was introduced in 2009 and 2010 to make these supply of software taxable. And here it says, clause 1.1 of the EULA relates to installation and use. It authorizes an individual to install and use a copy of the software on a personal computer or other device, and to install an additional copy of the software on a second portable device for exclusive use of the primary user of the first copy of the software. Clause 1.5 of the EULA relating to grants of license grants for media elements. That's may not be very relevant. When a transaction takes place between the members of the Infotech Software Dealers Association with its customers, it is not the sale of the software as such, but only the contents of the data stored in the software, which would amount to only service. And this is how the Madras High Court says that if there was an end user license agreement, it will be a software, it will be a service and not goods. And therefore they confirmed or upheld the levy of service tax at the relevant time at 12% on these transactions. Now, therefore, again, we have some element of conflicting decisions also when we come to come to licenses and end user licenses. But today, for the purpose of the GST law, my submission is as follows when we look at licenses or when we look at softwares. Softwares, we have to conclude, are goods. If they are in CDs or if they are in floppies, if they are in boxes, there is no problem. We are quite fine. It's easy to interpret. When they are downloaded in soft form, maybe they are downloaded through an FTP folder or a license is granted. Of course, eventually when you give a license, you have to hand over a copy of the software. To my mind, I will submit that these are still goods, and therefore they should be treated as goods. For the purpose of this GST law, therefore they should be covered under notification number 1 of 2017, which is in relation to goods. Notification number 11 by 2017, which is 9973, as we saw in the annexure and the explanatory notes, should apply only to licenses which are going to be allowing someone to use software further to incorporate those software into some other software and build further new software out of it. And that I may agree that those should be in the nature of licenses, because although he has only one copy, he may use that to make a new software of which he'll be replicating say another 10,000 copies and selling in the market. And therefore those should be in the nature of licenses. This could be in the nature of leases, and therefore these should be nothing but services. That is the way we should interpret this to be. With this, let me take you through one more angle to this, and I think that's a final aspect which we'll be discussing before we really go to the case studies. There is something in notification 11 by 2017 which caught my mind, or which caught my attention. There is an entry, entry 22, sorry, the 17 is incorrect, it's entry 22, heading 9984. And it says telecommunications, broadcasting and information supply services. It says supply consistent only of ebook. 2 is relevant, telecommunication, broadcasting and information supply services other than one above 9%. Now when I go to this notification and I go to the annexure, see what the annexure says. There is heading 9984, telecommunication, broadcasting and information supply services. When you drill down into that, 99843, which is online content services, and 998434 is saying software downloads. Again, now this puts a spanner in our interpretation. If you are saying that softwares are goods, then here we have under the notification itself and the annexure, software downloads are in the nature of services. So I thought let's go and see what the explanatory note says. Explanatory notes, again the same about software download, says this service code includes electronic files containing system software that can be downloaded and stored on a local device for later execution / installation. Electronic files containing application software that can be downloaded and stored on a local device. Again, therefore, this seems to be really covering softwares which you download on your laptop, on your iPad, on your phone. All of these, according to this particular interpretation, should go into the notification relating to services and not goods. But if I take that interpretation, then obviously we are contradicting the conclusion drawn by the Supreme Court that these are goods. And of course, bear in mind that if that Supreme Court was in the context of 366(12), subclause 12, which is the definition of goods under the Constitution, and that definition has not changed. Therefore, if you try to treat this as services, the question is that are you really treating something which is goods under the Constitution as services? And if you do that for the purposes under the GST law, whether that is legal or whether that such a provision or such a treatment would be ultra vires. Really, I think my own sense is they wanted to treat software as services, but I think there was some kind of a mishap. They did not really look at the definitions appropriately. Ideally, they should have really also amended the definition of goods in the Constitution to say all kinds of commodities, articles, and materials other than intangible, other than intangible goods, or something of that sort, or other than intangible property. Then automatically they would have become services, and everything would have fallen in place. But that was perhaps something which was overlooked at the relevant time. So I'm just going to recap. We quickly saw the treatment under VAT laws. I explained why, how, on what basis we said softwares were treated as goods. We went to the amendment of the Constitution. We went to the entries 1 and 11. We saw that the basis for treating software as goods has not changed, and that remains the same. We also saw licenses under 997331 and downloads, which we just saw 998434, which indicates that these are services, but then that would be contrary to the Supreme Court decision which we have seen. I think this is where the background ends. I had anticipated to take maybe a little lesser time, but we have taken a little more, but not a problem. The case studies now with this background material can be covered a little quickly. Atul bhai, do you have anything to say before we continue, or Krishnan sir?
Yeah. So, Parind bhai. Yes. Yeah. So Jayesh bhai has given that post TCS, Madras High Court in the case of Infotech Software Dealers Association held that software having end user license will not be regarded as goods, and it is a service in the form of a license to use the software. Most of software do such EULA your comments on the same.
I already gave my comments on the same. We refer to that decision as well on slide 23.
Yes, yes,
I
yes,
think
yes,
that was
yes.
an aberration. I don't think that is the way you should look at it. I have a
Mm-hmm.
host of decisions which are in our favor to say that they should be treated as goods. And here
Mm-hmm.
really what the Madras High Court said, that you are not giving a software, but you are allowing certain information within the software to be accessed. And I don't think that is the way to look at it. And that is probably because the way the contract was worded. But largely, I would say this is an aberration, and this should not be followed strictly, going by what TCS has said and what other decisions have said as well.
Mm-hmm.
Parind, if I can just add, Parind,
Yes, sir. Yes, sir.
this ISODA, one should not give importance. The last para of the judgment, in between they got so many remarks. But the last para, they are only saying that this levy on software is not unconstitutional.
Yeah.
It's goods or services. One has to look at the facts of the case. So they have not given any categorical ruling. Goods or services. The last
Right.
para is conclusive. So
Correct.
most important. So they have not given any guideline or any categorical finding. And
That's correct.
you also look at uh, that judgment on the Bombay High Court, Monsanto.
Yes.
Monsanto was on franchise, but there are 4 paragraphs on software.
Yes.
The judge has very strongly said that the downloads also would be considered as goods.
Yes. That's correct.
Yeah. And the third thing, we should not give too much importance to EULA, end user license, because that is only a document to ensure that there is no infringement. He's paying for end user license.
Correct.
They are paying for the software. The software either 128 ELT ACC, it's put on a media, is goods. But even if it is downloads, the way the world is moving, it will be good. EULA only says that you should not infringe, because that way, even if you buy a Lata Mangeshkar CD from Rhythm House, that EULA is inbuilt. There's an implied infringement clause. But EULA wanted to be a bit strong, and one should not give too much importance to EULA. What they are giving you is the software. And one must also differentiate between a copy of the software and software, as per the Copyrights Act. And copy of software is distinct from software. And the copy of the software is what they are giving you. They are not giving you software.
That's correct.
It should all, with all this, I think your proposition that it will be goods, to my mind, is quite cemented. I know I'm myself also involved in one litigation where they want to say it is service, but I think because all based on EULA.
Right.
EULA is not, it's only a document to ensure there is no infringement. And as
Absolutely.
your proposition, which you have nicely pointed out, that it can be services only if you give a right to the other fellow to further reproduce. Then, that could be in the nature of a service. So I think you have quite, aptly summarized the. Of course, the litigation will go on.
Absolutely, sir. And just to sum up in a way that in all these kinds of transactions, whether I'm getting a CD, whether I'm having a download, whether I'm having an EULA, even in an EULA, I have to have the software in my hand. So I get a copy of the software. I don't get the original copyright, and therefore, as the Supreme Court in TCS said, you get a copyrighted article, a copyrighted product, and that I'm going to be able to store on my computer. I'm going to use it according to my wishes. I can use it as long as I want to use it. I can treat it as an asset belonging to me. Of course, if it is a small software, you don't worry about it, you don't bother about it. But large softwares, expensive softwares, you capitalize them, you show it as an asset. and therefore those are also treated as assets which are owned. They add to the value of the business, and therefore these are, to my mind, nothing but goods, and those are all factors also which we need to bear in mind. So with that, can we move over to the case studies?
Yes,
I think
yes.
the case studies may become a little easier with this discussion if we are all agreeable to the interpretation I have placed. Well, here is the first case study, which was A Limited, which has its office in Office and Software Development Center in Bangalore. It is developing an ERP software which is used by businesses, and there are various situations in which, or various methods through which the softwares have been supplied to entities. And the question is that how should this be treated, as whether these will be goods or services. And here we have given the four different elements which are on series, on an FTP link, which is to be downloaded through the cloud or available on a cloud, and paper licenses or EULA. I think we all will agree that we don't have any challenge when it comes to CDs. When it comes to FTP link also, to my mind, as we've just discussed, my interpretation would be that these are in the nature of goods, because it is only the media which is changing. If I follow all the discussion we have had, even though I'm downloading the software on goods, through the FTP link, the only the media changes between the first, which is on a CD or a floppy, as compared to an FTP link, and the medium through which the goods are handed over, the goods are delivered, cannot really determine or change the nature of the transaction. Therefore, the media or the medium is irrelevant. This has to be ignored, and therefore, download through an FTP link also is going to be in the nature of goods. Bear in mind that FTP link is something we use day in and day out. So, if you are going to say that these are goods, but they are no longer, they are not only restricting themselves to the softwares which you download. The games which you download are also in the nature of softwares. In fact, the music or the ringtones which you download on your phone are also in the nature of softwares, because when you play it, it creates a particular sound in a sequence, and therefore the question will be that whether how all of these should be taxed and what should be the classification of these. We had a lot of disputes once upon a time. These were sometime around 2005 to 2008, where the downloads of the ringtones from the on the mobile phones was questioned. All the telecom companies were obviously paying service tax, and the question was whether these are actually in the nature of, the ringtones were in the nature of good software, and therefore they should be taxed under the VAT laws or not. I think somewhere along the line there were some entities for which there were some disputes which had been raised, and in some other entities thereafter the matter just died down. Nobody really bothered about it. But yes, there was some ongoing dispute, though it was not very pervasive. The third is cloud. Cloud was nothing but what we call SAS, or software as a service, where you can access the website of the service provider. You can use a software, maybe to do your accounting, maybe to do your data processing. So therefore, or maybe for filing your GST returns. And therefore, you are actually accessing the software on the cloud. You don't get to download the software. In fact, your data goes onto the cloud, which is given over to the service provider. And therefore, this on a cloud, which is a SAS model, which is a software as a service model, is nothing but a service, and therefore it will be taxed as such. Paper license, EULA, I think we should be able to easily conclude that these are nothing in the except in the nature of goods. There's only one element which we will need to look at, is that there are times when a paper license is not backed by a software, and I'll just explain this, how this can happen. Say in your organization, you've taken a software license, you've taken the license for 100 users. At the relevant time, say for example, Microsoft gave you the link or the access to the link, or maybe they gave you a box of CDs which says please install on 100 computers. Then your business expanded, and then you wanted 25 extra licenses. So you just wrote to Microsoft that I need 25 more licenses. They said granted, please pay so and so amount. You remit the amount. Nothing more needs to be done. You already have the software with you. You already have the link. Now instead of installing on 100 machines, you're now going to install on an additional 25 machines. But there is no software being delivered to you at that point in time. Therefore, there could be some challenges on how the taxation will work on these kind of transactions. But all the same, we should be quite fine to accept that these are nothing but the nature of transactions of goods or supplies of goods only. Any thoughts from this before we go to the case study 2? I mean, this is a short point, but since we discuss the larger part, I think this may not take too much time to discuss. Atul bhai?
Yeah, Parind bhai. Yeah. Keval, any questions?
No, sir. We can go ahead.
Yeah, go ahead, sir. Go ahead.
Okay. The next obviously was that in the above scenarios, which of the provisions of the CGST and IGST Act should apply for determining the time of supply and the place of supply. And of course, we have the provisions of goods and services, and I think we have section 10 and 11 in relation to goods, 12 and 13 in relation to softwares, services. But let's look at the next slide, which is a little easier to follow. If you're going to look at softwares as goods or services, and depending on what these are, you have to, if they are goods, you have to now look at movement. If it's goods, does it have movement or does it not involve movement? Services always assumes movement because the way the whole section is worded, services are deemed to move from one place to the other. And therefore, depending upon the location of the recipient, service gets taxed. But based on the movement, then you again split this to say if it involves movement, then will it be a domestic transaction, which is within India, and therefore section 10 applies, or will it be an export or an import transaction? Now, the whole question when you look at section 10 and section 11 is again that section 10, if we specifically talks about movement and delivery. And I may just read out one clause of section 10A, which may be just relevant to highlight the point. It says where the supply involves movement of goods, whether by the supplier or the recipient or any other person, the place of supply of such goods shall be the location of the goods at the time at which the movement of goods terminates for delivery. That means it is saying there should be movement and there should also be delivery. Now the question will be that can there be movement in the case of softwares, or will there not be any movement in the case of softwares? Is it delivery in the case of softwares or not? I think you already had one discussion on other IPRs, which was led by my friend Divyesh Lapsiwala, where there was a discussion to say in IPR, will there be a movement at all, or will you always go by 10(1)(c), which says there is no movement and the goods IPR is located at the place where it is used or registered, and therefore you will always apply, you might have to apply section 10(1)(c). And before I really conclude, I want to just highlight or bring you to this particular point, which are 3 decisions which are relevant for us. A decision of the Supreme Court in the case of NTPC. It was regarding electricity. Electricity was sold by in Andhra Pradesh. It was consumed in Tamil Nadu. And Andhra Pradesh said there's a tax on consumption of electricity, and it says NTPC, you need to pay tax in my state. Supreme Court said no. The electricity was only sold from Andhra Pradesh, but it was to a customer in Tamil Nadu. Therefore, the electricity moved from Andhra Pradesh to Tamil Nadu. It was an interstate sale of electricity, and therefore the consumption took place in Tamil Nadu. Andhra Pradesh cannot levy tax on consumption of electricity. So it was not in relation to sales, but it was in relation to consumption. And therefore, this was a decision where the Supreme Court said, even in the case of intangibles, there can be a movement from one location to the other location. We have a relatively recent decision of Club Pty. It's a Delhi High Court decision. It is under the Income Tax Act. It talked about a situs of intangibles. And here, when the Foster's brand was sold by Foster's Australia, the Supreme Court, the Delhi High Court said that in the case of intangibles, the location of the property shall be the location of the owner. The owner is located in Australia, and therefore this sale took place from Australia. It is immaterial that it is ultimately registered in India, it is used in India, and the customer or the buyer is in India. In spite of that, it is not going to be a transaction which is going to be taxable under the income tax law in India. And therefore, the situs of an intangible is outside the country. You cannot levy income tax on this transaction. Mind you, it is under the Income Tax Act. But a similar decision came in the case of Lal Products, Kerala High Court. This was where the soap brand Chandrika was sold. It was sold to Wipro through an agreement in Ahmedabad and in Pondicherry. And the argument was that the agreement was outside the state and therefore there was no tax on this. The Kerala High Court said, well, the customer with whom you have entered into an agreement is in Ahmedabad, Gujarat, but the seller, which is Lal Products, was in Kerala. Therefore, this is clearly a transaction which is an interstate sale of the trademarks from Kerala to Gujarat. There is a movement of the trademarks from Kerala to Gujarat. And therefore, these three, and there are a few others as well, will help you conclude that even in the case of intangibles, there can be a movement of the rights, there can be the movements of the property from one place to another. And therefore, if I go by this argument, there can be a movement if you're going to treat this as goods. Of course, establishing that movement is going to be a totally different point. We are going to have some challenges when we really go into our assessments and claim of exemptions if it's an entity outside the country. The second element is obviously delivery. Is there a delivery of intangibles? Technically, if it is a patent, if it is a trademark, there is no delivery. The minute I've signed my agreement, the property has passed. And what do I need to do to place the buyer in possession of the property? It's an intangible, and he's always in possession. So that may be true in the case of intangibles. But I believe, or my argument is, software is different. Even though I have entered into a license, an agreement, or a contract of sale for a software, ultimately I have to give my customer the possession of the software. It may be through the CD or the DVD. CD or a floppy. It may be through an FTP link. It may be a download. But ultimately, that copy of the software has to be downloaded on his machine. It has to be available so that he can install it, he can execute it. And therefore, to my mind, in softwares, there will be a delivery. There will be, because of the other decisions, movement. And therefore, based on this movement and delivery, you'll have to determine how the taxation works, applying section 10.1, 10.1A, 10.1B, 10.1C, and of course, the host of other decisions. Sorry, other clauses. Of course, when we go to export and import, it's going to be a little different. Export means taking goods from India to a place outside India. You will have a question to say, how do I establish that there was an export? That is another point which we'll come to in another case study. Import would be a similar to say, how will you establish you have received the goods? And that's the way you'll be really determining the taxability. If it is services, we don't have any difficulty, because if it is services, it simply goes to location of the recipient, and location of the recipient will determine the place of supply, and therefore that becomes quite simple when it's a service in relation to a software. Coming to time of supply changes. This we already covered. Time of supply changes. If it's goods, then I have to go and pay tax at the time of removal or at the time of delivery where there is no movement. But if it's services, I get 30 days from the date of supply of services to raise my invoice under section 31(2) read with rule 47. And therefore my time of supply also changes. So when you do your audits, you have to really decide what are your clients providing. Are these goods or services if they're dealing in softwares? And then you know whether the time of supply has been met or not, whether there's a default and there's a potential liability for payment of interest. Any thoughts on this or any questions?
Sir, there are a couple of questions, not directly on this, but one of the questions is whether online download of software can be considered as an actionable claim.
Okay. An actionable claim is defined differently. I don't remember the exact wordings, but it is saying claim to a debt other than a debt secured by a mobile property, not in possession. So a secured debt is not an actionable claim, and a claim by a debt which is is an actionable claim. Now this is not a claim to a debt, and this is actually an asset which is owned. You can buy it, you can sell it, as Supreme Court has already said, and therefore I don't think it gets covered under the definition of actionable claim.
Correct. Sir, one more question. I think you have already answered. Downloading ringtone, whether it will be supply of goods or service. What I understood you correctly, you said it will be treated as supply of goods.
My interpretation is that it should be classified as supply of goods. Yes.
And
But then if you are a telecom company, you have a major problem to find out where is the customer, which location was he when the ringtone was downloaded. He may be a subscriber in Mumbai and traveling to Delhi, downloading in Delhi. Then you have all those problems with you.
So, just one more question has popped up, which is there a difference between software service and information technology services?
I think these are used interchangeably. And if you look at the old service tax law, also we talked about information technology software services, ITSS. Similar phrases have been used, but I think essentially they mean the same. And those services may include licenses, leases, development, customization, upgradation, installation, so on and so forth.
Sir, I have taken the issues. You can move further.
Thank you. Now, this is a fairly straightforward question, though you might have in certain situations some challenges. The question is, when a software is provided to business entities, say A Limited in our example also undertakes customization and implementation for a separate charge. What should be the treatment of the charges for customization and implementation of the software being supplied? Now, it's in a way quite simple. The answer is very easy and it's straightforward. It is there in section 15(2)(c). It says all incidental expenses, including commission and packing, charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier in respect of the supply of software supply of goods or services, or both, at the time of or before delivery of goods or supply of services. So when you're doing your customization and implementation at the time of supply, and then if your contract is worded appropriately to say, and my supply is complete, or the software is going to be accepted by the customer only when the customization and implementation is complete, then in accordance with section 15(2)(c), you will add these charges as supply of the software. And if you're treating the supply of software as goods, then you're going to pay tax according to the time of supply and the place of supply of those goods. If you're treating it as services, you're going to pay taxes accordingly. If the customization or implementation is at a later point in time, say you already supplied and implemented the software, now there's a further customization required, or the customer needs to re-implement the software for various reasons. In which case, of course, it is not at the time of delivery of the goods or supply of services. My supply of the services or goods or services in relation to the software had already taken place, and therefore such a transaction will obviously become a distinct transaction, which will be purely a supply of services only. Your question only may be in very nuanced situation, where in exceptional circumstances you have two contracts. You have a contract which says supply the software. That contract might also say, well, once you supply the software, it becomes ours and the supply is complete. And there's a separate contract for customization and implementation. And therefore, in that case, should you treat the supply of software, assuming that you're treating the supply of software as goods, should you treat that as goods and the customization and implementation as services, or should you still bundle them? Well, I think that may get a little tricky, but the way section 15(2)(c) is worded, I would interpret and submit that even if the customization and implementation is under a separate distinct contract, it would rather, if there is any clauses which are going to give any indication that the customer accepts the software only upon implementation, only upon performance. Say in big software contracts, you might have performance guarantees, you might have UAT testing, user acceptance testing. You might have certain period before so for stabilization period. If all those clauses are there, then eventually both these contracts are going to be read as a single contract, and it will be interpreted as if the customization and implementation services are before the delivery of the goods or supply of the services, and therefore they'll get added to the value of the supply. I think that is the way you'll have to look at it, though you may not have too many challenges on this, except in very stray cases, as I mentioned. Keval, any questions, or this is fine?
Sir, again, it go back to the same issues, goods versus service. So there is a question which says, how do you differentiate whether perpetual license as well as periodical license, both of these will qualify as supplies of goods? Say 1 year license and one will be a perpetual license.
Well, if it is I will look at it like this. In order to be goods, I should have ownership. In order to be goods, I should be free to use it the way I want. In order to be goods, there should not be any restrictions to the use. Of course, there can be restrictions on the IP that I don't infringe the IP, but at least to the copy of the software is concerned, I have the full rights. And therefore, if it's a perpetual license, although you term it as a license, you effectively get you get ownership in the copy of the software which has been provided to you. You can own it, you can store it, you can use it as and when you want, and of course you have the highest right as an owner, which is the right to destroy. And therefore, I would treat this as a transactional supply of goods. If it's a 1 year license, which says you can use it for a year, after a year you are no longer entitled to use it. Of course, the data can be taken, but you are not entitled to use it. You don't become an owner of that copy also which is provided to you, and therefore you need to either return it or, of course, delete it from your software from your system. In that case, I would treat this as more of a license, which should be in the nature of a service.
Noted. So an interesting part comes up if we treat, let's say, even downloading of a software as goods, and we are importing it from a foreign vendor. This may have some implications towards customs, because if it is downloaded, it may not come through custom barriers. So will that create an issue?
It will be an issue. We have a separate case study for that. We'll just come to that in a few minutes.
Sure. Sir, there are a couple of issues again on these lines. So I would feel, sir, if you can just take up the case studies which you have. At the end, I can come back to these questions about
Certainly.
software being goods or services.
Yes, if they are broadly covered, Keval, we can take them. We just want to make sure that everybody is clear of the concepts, and we can come back to them after we have completed the case studies.
Sure, sir.
The next one is, again, fairly simple. If A Limited has received advances from its customers, sorry, there's a typographical error in this. I did not realize that. If A Limited receives advances from its customer in relation to the supply of software, will such receipt be liable to tax? We are aware that if you are going to treat it as goods, there's an exemption. If they are going to treat it as services, there's no exemption. You have to pay tax on the advances. Now, therefore, it all depends on the stand you're going to take. Of course, just to avoid tax on advances, you don't take a stand that these are services, these are goods. You have to really look at how the transactions are structured. You have to build your case, ensure that you're satisfying all the criteria of goods before you conclude that to be so. I don't think we'll have any challenge over here, so we can probably move on to the next question. Keval?
Yes, sir.
Now, this is a question which does not have any direct answer, but let me explain this, and this is going to be a severe issue which we are going to be faced. Let me read out the question. What should be the treatment if A Limited engages dealers and distributors for marketing and sales of the software? The contract, if any, for supply of the software will be entered into by the dealers and distributor, who shall invoice the end customers and also collect the consideration. The dealers and distributors pay 80% of the amount of the invoice to A Limited. The software will be provided to the customers in any of the modes in question number 1, which is CD or FTP folder or cloud or whatever. Why this is relevant is, in a way, that if I'm A Limited, I'm providing software, or let's say I'm providing software through an FTP link, easiest to explain to everyone. I have a dealer. I will enter into an agreement with my dealer. My dealer will go and sell the software. He enters into an agreement with an end party. But the software goes from me directly. The software does not go from me to the dealer and from the distributor, and from the distributor to the end customer. I simply give a activation code or I give an FTP link password, which I hand over to my dealer. My dealer or the distributor will give it to the end customer. End customer will directly download from my website. And therefore, in that case, how should I treat this transaction to be? What should be the nature of the transaction of the dealer or distributor? Is there a two transactions? Are they one transactions? If the software is directly going from my website, the FTP folder, or my server, then how should I treat this? If I'm treating this as goods, should I treat this as bill to ship to? If I'm treating this as services, then I simply say that the recipient is my dealer, although actually his download is by his end customer. How should this be really be treated? So this is where a little bit of a question which comes to my mind. The similar issue also will be for EULA, the end user license, because whenever the customer enters into an end user license, he signs a dotted line. Although he hands over the papers to my dealer, effectively it says that ultimately the customer is responsible to me, which is A Limited, as a developer of the software product. And will this change anything? With this also, I want you to bear in mind Schedule 1, Entry 3, activities to be treated as supply even if made without consideration. If it says supply of goods by A by a principal to his agent, where the agent undertakes to supply such goods on behalf of the principal, will be deemed to be a supply made by the principal to the agent. So if I conclude that since the software is downloaded from my FTP folder, the end user is actually getting the software directly from me, and the role of the dealer or the distributor is only that of an agent, then will I get trapped because of Schedule 1 Entry 3A, which is to say I still have to pay tax on the transaction between me and my agent. Of course, then I apply the rules which are applicable to the valuation rules, which is saying 90% of my sale price, the price at which I'm normally selling, and here I'm saying that the dealer is going to give me only 80%. So will that create a valuation issue or not? So this is going to be a little convoluted. And let me try and split this into two parts, and I think we may also welcome the views of Mr. Krishnan or Krishnan sir on this. The first part which I will say, so far as the invoicing is concerned, irrespective of the method or your interpretation, the invoices so far as A Limited is concerned does not change. If you say that A Limited is, the dealer and the distributor is the buyer, maybe the buyer of my goods or the buyer of my services, I have to bill him. Even when the end customer is downloading the software directly, it becomes a bill to ship to transaction. If you say no, the software is actually going to my dealer or distributor, then the place of delivery will be the place where the dealer or the distributor is situated, and therefore that will solve your problem. That will close the loop so far as the levy of tax is concerned, and you'll probably then apply 10(1)A or 10(1)B. If you are saying software is a service, in that case also as a recipient of the service, I'll bill according to the address of the dealer or the distributor, and therefore again you will not have a problem. If we conclude that the dealer or the distributor is an agent, and therefore he's not having much to do except that he's only acting as an intermediary, in that case I will have to go through Schedule 1 Entry 3A, where there is a deemed supply of the goods to the agent, which is my dealer and distributor, and therefore again in that case also my invoice is going to be in the name of the dealer, and therefore it solves the problem that I'm going to invoice the dealer and the dealer is going to invoice further to the end customer. Our only problem arises if we say that it is services, and therefore in that case how do we software is a service and my agent is an intermediary, then how do you really deal with it? Now that could be a slightly a gray area on how that should be split up, to say if it is services, can I then immediately do away with my issue of intermediary and simply say that my dealer then becomes a recipient of the service, and therefore I will continue to invoice the dealer or the distributor as the recipient of that service, of the software service. So that could be probably one way of looking at it. I do hope that I've conveyed it clearly and not created confusion out of it. But I think there's, except this one gap where which may create some doubt, I think in all other situations of goods, it solves the problem as such. If I'm treating my dealer and distributor as an intermediary or an agent, then of course I do have a question on valuation, where my valuation rules, which is rule 29, talks about a 90% value at the price at which the goods are eventually sold to the end customer. The reason I'm raising these questions are that it does create a doubt, and I do fear that if you're a similar software seller in India, where your principal is outside the country, then our department is always going to be happy to say, no, the 20% margin you made was actually a margin made by an intermediary. An intermediary is taxable according to the location of the supplier, and therefore it's not an export of service. And all the transactions, you have to also on your margin pay tax as an intermediary and subject that to GST. So I think that is the background from where I was coming from to highlight this issue and this problem which could arise. The question, sir, would you like to add anything on this or any questions on this, please, or views?
I think one thing is sure, as Parind you said in the start of the session, that we'll have to see what the future will hold. A lot of issues may arise. But as of now, if we were to advise somebody for a dealer or distributor, by and large, I think the arrangement is on a principal to principal basis. So if that is so, and we already concluded in question 1, the software is goods. Even normal goods also, the distributor can tell the manufacturer to directly deliver it to the customer. But it doesn't cease that there are two sale transactions, one from the manufacturer to distributor and from distributor to customer. So the mode of delivery may not alter the transaction. Maybe the delivery comes directly from Microsoft, but it would still be considered a sale by the Microsoft to the dealer and from the dealer to the customer. I think of that there should not be any issue. It will be treated as two sale theory. I think the only difference which may arise is somebody may interpret that EULA license. But we already said EULA license is only for the limited purpose of ensuring infringement, nothing more than that. It doesn't have a independent leg to stand on. Just with EULA, nobody can do anything. You have to give the product. The third thing which may come across as against normal goods, interactions many times may happen directly with the customer and the Microsoft without the distributor being involved. But that is also okay. Many times Vijay Sales may sell the TV to the customer, but thereafter customer will contact Sony. So all this, if you compare software sale, other product sale, I think all the parameters would be there. Only issue is EULA. But we have already explained what is the EULA. So I am with you that Microsoft will bill the distributor as goods, distributor will bill the customer as goods. That is ceteris paribus, all matters in the contract remaining constant. I agree with your view.
Thank you, sir. Keval, any questions, please?
Yes. Will there be an issue, or do we need to touch upon the aspect of trading of goods or trading of service as a separate service in itself? Will that be an angle to look at?
I think after the introduction of GST, we may not really worry about it, because the trading in goods is still a P2P transaction, or trading of services also will be P2P transactions, and therefore you will show it as a purchase of goods or services and supply of goods or services further. So I don't think that is going to now impact anything.
Noted, sir. You have covered the other questions already, so you can take further.
Sure. We'll go to the next one. We are quite on time. We should be done in maybe about 10 minutes from now.
Yes.
The sixth question is, A Limited also acquires software from foreign entities, which are used in the course of business. Now, I'm not really highlighting whether it is CD or whether it is an FTP link or whatever. Because we are more or less saying that the treatment is going to be towards goods and it's going to be a uniform treatment. What will be the taxability when software is received from a foreign supplier? And I think we already had this question. Well, again, the same question will be that whether it's goods or services. If it is goods, then the receipt of the foreign software from a foreign entity is subjected to tax under Section 3 of the Customs Tariff Act. And this tax is required to be paid only at the time of filing of the bill of entry. And this is in proviso to Section 5(1) of the GST Act. Now, this is where the whole question creates a dispute arises. As of now, if I'm receiving this software in the form of CDs, in the form of floppy disks, there is no problem. It will pass through the customs, I'll file a bill of entry, and therefore I'll pay my taxes. If it is, on the other hand, downloaded through an FTP link, or if I'm getting a paper license, for example, I buy that extra 25 licenses of SAP, and I only enter into a paper license, then how do I pay my tax, if at all? And here, the mechanism for levy of tax fails. I think if I look at it very technically, if we are right in concluding that these are goods, there cannot be a levy of tax on the import of the software. The only method or mechanism through which I can pay tax on the import of the software will be if I go and treat this as services. If I treat it as services, there will not be any difficulty. I'll pay a reverse charge. I'll pay it by on the date of payment of 61st date. I'll create a self invoice and I'll pay my taxes. But that means if I want to pay my taxes and I want to be a diligent citizen and I want to pay my taxes myself, then I'll have to treat the purchase of the software as services, and then I'll have to pay my taxes. Now, in a way, that means we are saying that I'm going to treat goods as services for the purpose of discharging my tax liability. If you're going to get your credits, you might be happy to do that. You'll say, yes, I will go ahead and do so. But if you're an entity which does not get full credits, then you may say that I want to then litigate this off. I want to fight it out to say that, well, these are not goods for the purpose of customs. You don't have a provision made under the GST law for the levy of reverse charge tax on goods when it is imported from outside the country, and therefore these cannot be brought to tax. Any thoughts on this amongst the participants, or any questions, please?
No questions directly on this point, sir.
Okay, so we'll move to the next. We can come back if there are any questions. Similarly, on the export side, will suppliers of the software to an entity outside India be taxable? Now, A Limited supplies the ERP to an entity outside India. Will it be taxable? How should these transactions be reported in your GSTR1? Whenever you're supplying, first you have to establish movement. Section 11 and the definition of export, it says taking from India to a place outside India. And we did talk about the establishing movement to say, yes, in software, you can say that there is movement of the software. We have so many decisions which we already discussed, and applying Section 11, the export of the goods will be, there should be possibility to claim export of goods. The next is, of course, your documentation. You have to report this in Table 6 of GSTR1. Now, Table 6 of GSTR1 again says, please put in your shipping bill, please put in your bill of export. Where do you get that? Because you simply gave somebody an FTP link, or you might have just given him an EULA to say, okay, additional paper licenses, I'll call it additional paper licenses. And therefore, there is nothing which is really physically shipped or sent from the country. And therefore, you don't have a shipping bill or a bill of export. How do you treat these to be? So this is where, again, the whole mechanism is failing us, where they are not recognizing that there could be export of intangible goods. And therefore, when you go to claim your refunds, when you go to claim your export benefits, I think you are going to be challenged. If you're going to claim your export refunds for ITC, or you want to export on payment of taxes and then claim a refund, the department is certainly going to get a chance to say that there is no documentation. We are not seeing this in our ice gate. We are not seeing a shipping mill, and therefore we cannot process your refund at all. And that's where we will have a little bit of a challenge. The next is, of course, the issue about requirement for receiving consideration and convertible foreign exchange. The definition of services already has a definition, a clause which says the consideration should be received in convertible foreign exchange unless permitted by the Reserve Bank of India. Now, on 23rd of March, we've introduced a new rule, 96B, which says that if you do not receive convertible foreign exchange for export of goods, then you need to reverse your refunds or your refund of input tax credit. Of course, the virus of that is going to be open to challenge because that is not provided for in section 16 of the IGST Act. But keeping that aside, the question is that between goods and services, then how do you want to really treat this with respect to receipt of convertible foreign exchange? So I think export of goods itself also presents a challenge on putting the claim through. You might have a lot of officers who may come in, or assessing authorities who may come and say, show me proof that the goods have reached the other destination, show me some proof of dispatch, otherwise I will not allow the claim. And therefore that's where we are going to see some litigation coming forth. But legally there should not be a challenge. We should be able to claim the export of goods for these transactions. Of course, export on payment of taxes will become a problem. Shall we go to the next one, Keval?
Yes, sir. Yes, sir.
8 is straightforward. A Limited as a separate division in Bangalore, which assists clients in modification and upgradation of existing software. What should be the treatment for contracts for modification or upgradation of software? Very easy. Design, development, upgradation, all are going to be in the nature of services, and therefore it is also provided under Schedule 2, Para 5, and therefore that's quite fine. But bear in mind, before I come to that, do look up the decision of the Karnataka High Court in the case of Sasken Technologies. A very interesting decision. At least I would rate that to be one of the finest decisions on softwares. Very comprehensive, takes care of all the situations. It distinguishes between intellect and intellectual property. He says for a programmer, when he uses his intellect to write a program, he's using his intellect, and there is no intellectual property in which property passes, there's no intellectual property in which ownership passes. And then, therefore, a programming service, a designing service, development services, similar to upgradation or modification, are always going to be in the nature of services. A fine decision to be read. But we have a little challenge when it comes to two decisions of the Maharashtra Tribunal. Quite famous, you might have already heard of them, Mastek Limited and Atos Origin. In these decisions, the Maharashtra Tribunal has said that when you are having a contract for modification and upgradation, it amounts to supply of a software on which you have to pay VAT. Therefore, they have said these are goods, and therefore you should pay VAT. They have really gone on one particular clause in the contract, which was the copyrights clause. As a copyright protection measure, all such modification or upgradation or development contracts will always have a copyright clause which says, if under the Copyright Act, the developer or the service provider gets ownership in any copies or any copyright, any form of copyrights, or he gets any rights, then he shall transfer and hand over those rights to the customer or to the recipient of the service. That is only to protect the copyright, but such a clause is always there. In both these decisions, the Maharashtra Tribunal has said, well, because of this because of this clause, effectively, Mastek and Atos Origin are doing nothing but transferring the copyright after developing the software, and therefore this is nothing but a supply of goods on which tax is payable. So this is where you may be hitting a roadblock. The other aspect we need to also bear in mind when you interpret is, please remember that goods is defined, services is anything other than goods. So if something is goods, then it cannot be services. You cannot say it is services and therefore it cannot be goods. You'll have to first say that it is not goods, only then it becomes services. So services is a residual definition, and therefore you'll have to establish that these are transactions of services and not supply of goods. But these two decisions are, of course, going to the High Court. They're already in the High Court, and behind these decisions, we have at least about 50 or 60 different appeals which are going on before various forums, including the tribunal in Maharashtra, which eventually will again, some of them will at least go to the High Court, when the final decisions are given. Keval, any questions on this?
One of the question which comes up is isn't upgradation work given on a higher basis, and therefore it should be treated as a service?
Upgradation is given on work for hire. It is called work for hire. You're absolutely right. The work for hire is always a service. However, I think there are some deep linkages to the Copyright Act. If you please do read up the Copyright Act, which says that in the case of any work done by an employee, the copyright in the work done by an employee always is with the owner or the person who's the employer rather. Now, I don't remember the exact wordings over there, but there was one interpretation which was coming to say that particular clause only applies in an employer and employee relationship. It may not apply in the case where it's a service provider and service recipient relationship. So I think somewhere taking some of those clauses, there was some claims being made that these are not transactions of work for hire. These are still supply of copyrights and developed softwares, and therefore these should be taxed. Do look up these provisions of the Copyright Act also, because I think someday we are going to be disputing or debating on these provisions.
Noted, sir. Sir, now we can take up all the questions at the end.
Yes.
A couple of participants have also raised their hands. Maybe we can take up their thoughts once you are done with your points.
We'll be done in the next 2 minutes. Last question. Part of this question is already addressed in one of the earlier questions, but we'll just take the other part. B Limited is a 100% subsidiary of A Limited situated overseas, which has developed a new materials management and logistics software. A Limited has decided to integrate the software into its existing ERP. B Limited allows access to the new software via a FTP link, which is downloaded and integrated by A Limited with its ERP. Will there be any liability for payment of GST on the software of B Limited downloaded by A Limited? Of course, to the extent of download of the software, we already saw if you're going to treat it, if it is goods, the question is whether the GST can be levied as part of customs duty or not. If it is services, you'll pay reverse charge. So that issue need not be addressed over here. The issue which I wanted to really bring up over here was that we look at Schedule 1 is a situation where B Limited, rather the situation we need to look at over here is a scenario where B Limited does not charge A Limited for these software which is supplied. Assume it is passes the test of the transfer pricing norms, assuming there are no other challenges. If there is no levy, what will happen over here? And the question was in relation to Schedule 1, Entry 4. Activities to be treated as supply even if made without consideration. Clause 4 says import of services by a taxable person from a related person or from any of his establishments outside India in the course of furtherance of business. So this particular clause makes a provision to say that if you receive any services free of charge from a related person or from your branches or head office outside the country, you still have to impute a value and pay tax on it. Again, we go back to the whole interpretation to say, is this going to be in the nature of goods or services? And do you have to pay tax? I'm coming back to a discussion which we talked about 997331, which said that looking at 9973, this is going to be the new materials management and logistics software, which is going to be integrated into the existing ERP to develop a new software or an enhanced software by A Limited. And therefore, we are really getting services which are very much similar to those defined or described under 997331 of the explanatory note. And in that situation, to my mind, it will be difficult to take a stand that what is being received and downloaded is only goods. It is in the nature of a license, a temporary license or permission to use the software. And therefore, this should be in the nature of services on which, because of the Schedule 1 Entry 4, the recipient A Limited will have to pay tax under the reverse charge by imputing a value. Valuation is of course a guessing game. How do you really value? I think that's going to be a topic for discussion some other day, but that's going to be a different problem altogether. But there will be a liability for payment of tax on this software which is allowed to be used. I think with that we have come to the end of all the case studies. Keval, I was hoping to keep about 10 to 15 minutes, but we just have about 7 minutes. But we can happily do any questions you wish.
Can I raise a question?
Sir, Jairaj bhai, yes, sir, Jairaj sir, you can go.
So one question, which is it may sound to be a very basic question or an idiotic question, but I thought I should raise it. They have been always qualifying the word software with the adjective or noun information technology. What are the other kind of software other than information technology software, if there are any? And during our discussions or so far, I have not seen anybody talking about any other software where there are similar issues which anybody faces. That is one question. Second is, as Anish had also made the initial remarks, that it is one area where direct tax, indirect tax both are struggling. But fortunately, in the indirect tax GST, we have Schedule 2, where the government has the ability to call something a donkey as a horse and a horse as a donkey if they wish to. So if we are able to list down all our concerns on the different types of software transactions, and once and for all represent to the government that these transactions, you treat them as goods, these you treat them as service, and therefore everything else in the law should follow, whether it is about export, whether it is about movement, whether it is about place of supply, etc. And for that, all have to think through the entire chain of the transactions, including, as you said, how will I report in GSTR1, whether there will be a shipping bill or not. Though it may be an exercise which may require some kind of funding for somebody to do that project, and we may have to tie up with NASSCOM in that sense. But it will probably put our practice and put a lock to our practice going forward, but it will resolve the issues. And that is, I think, one very proactive step which any organization will have to take. Whether CTC takes it or jointly you take it with CTC, BCAS, ITI and NASSCOM. But this is something on which I think a thought leadership initiative should be taken. It is worth doing it. It may take 6 months or a year for the project to get completed.
Right. Yes, sir, Jairaj. This requires a larger project. I agree with you. But I think the whole GST law requires a larger project, which will take 3 years. Jairaj, to respond to you, I can't think of any software other than information technology software, unless they are also referring to some software which are embedded into some machines, say into some manufacturing machines. There are some drivers and softwares which are embedded, and I don't know whether that is what they mean. But when you are talking about software independently or on a standalone basis, I think all softwares are always going to be information technology software. I think probably the phrase is being used because of our colloquial usage since the service tax days. That's the way we have defined it. In fact, even under excise, we had a similar definition as well. Coming to your second observation about Schedule 2, and I have a slightly different thought on this. And that was one of the reasons I really specifically highlighted the definition of goods and services tax under the Constitution. It says levy of tax on goods or services or both. That means the state can make a provision to levy tax on goods. State can make a provision to levy tax on services or on both. But can state make a provision to levy tax on goods by treating it as services? You never allowed that under the old law by saying goods was defined in a particular way. Therefore, you make a provision for goods, but you cannot apply provisions of services to goods. So I think there may be some challenge, and I think that is where I'm of the prima facie thought that it is not so easy for them to simply just tinker with Schedule 2 and define all of these goods as services. They will fall or come to a challenge for doing so in terms of the virus of such a provision.
I appreciate, but at the same time, if we were to look at the way our tax system is, whether it is goods, service or immovable property, there are only 3 things possible. So maybe we create a separate class for software. It is neither goods, nor service, nor immovable property, it is software. Some radical thinking is required, what I believe. I'm only trying to generate that particular debate through this forum, that somebody has to now think about this. Somebody has to bell this cat. If everybody keeps on saying that, okay, this cat is so scary, nobody wants to touch it because the whole field is transforming, developing with the IT revolution, and everybody runs away from it, who other than tax professionals will find solutions to this? That's my point.
I agree with that. Yes, we need to try and find an answer to this.
Yes, Bharat Vasani here. My question was, in case of on-site services, like the on-site development of program and implementation, whether it should be treated as a goods or services. Because in software industry, it's very common to develop the program at the place of client and implement it. Yeah. Thank you.
Yes, Bharatbhai, it does not, to my mind, it does not matter whether the software is developed on-site or at off-site in your office or at the location of the client. Ultimately, what is intended? Are you developing the software on what, as I mentioned earlier, as work for hire, where as and when you develop the software, the copyright in the software rests with the client and you have no rights except to provide the services, in which case obviously it should be in the nature of services? Or is your contract to develop is to provide supply of fully developed software for a module? If you are taking the risk of the development, the failure to develop, or the time taken, more or less, whatever it may be, then there could be a stand to say that what you're doing is supplying a ready-made software, part of which may be developed at on-site, off-site, and that would be in the nature of supply of goods. And that is precisely what tribunal in Mastec has seems to have gone on, to say that you're developing the software and then you're handing over the modified software back to the client, and therefore that's a new software which you're supplying.
Sir, in a situation where a person is developing a software and he is transferring that software to a private limited company, or for that matter any entity which is capitalizing that software in their books of accounts, will this have any bearing on the nature of the software? Can it be treated as a goods because it is capitalized?
Well, it can still be treated as goods even if the software is partly developed. To the extent of the partly developed software, there are some rights embedded in it. Effectively, what is software? Software is nothing but a copyright. And of course, then you make a copyrighted article out of it. So if you are transferring the copyright in a partially developed software, that itself is still goods to my mind, because it is still an IPR in the nature of a copyright. And therefore, you are transferring copyright which shall be liable to tax.
Thank you, sir. Okay, thank you, sir.
Sir, relating to the question number 6, regarding the software updates, if it is delivered by a link, that is downloadable file, it was discussed that it may be classified as goods. If say it's done by a foreign company, and as you said that if it is goods, then 8523 we can pay at 5% considering notification number 45. But there may be no custom clearance and import issues, as you said, and department may treat at service at 18%. So can you discuss a little more on it and suggest any practical way out to deal with such issues?
I'm sorry, I'm not. I didn't immediately catch your point on the 5%. So they probably you're talking about some other notification under which that is taxable at 5%. Well, yeah, I think 45 is talking about those. So 45 is talking about those
public
research
funded institutes, and they have a specific notification for treating at 5% for when software are goods.
Yes, there is one recent AAR of Kerala, from Karnataka AAR, suggest or something of that sort, which has said that software which is supplied is goods, and therefore they have said this will be taxable at 5% under that that notification 45 for this public funded research institutes.
Yes, sir.
So I think I do recognize that. Yes, Kunal, the problem is the same. Whatever you do, the department is going to take a contrary stand, and of course in this case certainly you're going to have a challenge, because they will say that this is nothing but a supply of service. They will, even if you file an AR, they will recognize the downside to this, because if they hold it to be goods for an import of a software, then the problem will be that how will you pay tax even if it is 5%. So again, this is something which has to be resolved at a policy level. We may not really be able to resolve it as such.
Okay. Thank you, sir.
Sir, there is one question from Mr. Anand. I suppose he's left the meeting. His point was, if supply of main software is goods and there are future updates given to that software which are chargeable, will that also become goods?
It is a bit tricky, but I will classify these upgrades into two parts. What we provide under what we call annual maintenance contracts. There could be something called updates. There could be something called upgrades. Updates are usually ones which are given for bug fixing, which are given for minor updations or improvements. Those, to my mind, are improving the existing software, and there I would tend to say it's in the nature of services. Upgrades are giving the new version of the software itself. Now, when you're giving the new version of the software, then to my mind that may become a supply of a new software altogether. At the same time, all this happens under a single contract of what is called an annual maintenance contract. So, which is an annual maintenance contract to say I will maintain your software up to the latest version. All the bug fixes, troubleshooting is all provided therein, and therefore once the principal supply is maintenance of the software and keeping it up to date, I think therefore even if an upgrade is provided, then you'll be able to say that this is nothing but a provision of service.
Notice issue was Schedule 2 covers temporary transfer or permitting the use of enjoyment of IPR. So in spite of this Schedule 2, whether we will still continue going by the decision of TCS or it will change the impact?
I think TCS is good law because it eventually interprets the constitutional entry. So I would still go with TCS.
This question is, say if the software is imported in a CD and thereafter exported via an email or an encryption key, will that change the fact that whether the software will be categorized as goods or services?
I think no, it will not make any difference. You imported goods, you exported goods. Only the medium changed, so that should not have any bearing on the transactions.
Hi, Parind. In case of import of goods, instead of like if we want to pay the GST, isn't it more advisable to pay through DRC3 than classifying it as service and paying under RCM, paying through RCM?
No, in the case of import of goods, but then I'm sorry, that is only a method of payment, Shalin. I did not quite catch your question to say that you are admitting it's a reverse charge liability?
No, I am saying it's not a reverse charge liability. What I'm saying is it is goods. I do not want to get into a dispute at a later stage.
Okay.
It's a substantial transaction and I want to pay my tax and get it over with. I am getting my input credit. Right. But I do not have a mechanism to pay tax as goods on imports. So why would I classify it as a service if I can pay it through DRC3?
Well, in a way, when you are paying through DRC03, that's only a method of making a payment. You still have to connect that to a transaction on which you are liable to pay tax. So what is the transaction on which you have to pay tax? If you're going to pay tax, the government is never going to dispute it. They are never going to challenge it. So even if you pay through DRC03, I don't think it matters. The only other side of it you have to bear in mind, you'll have to just take that challan and the reference to DRC03 while you're going to claim your credit. But the minute you try to pay through that, you are obviously going to pay tax at the rate applicable to services, assuming that the rate of tax on services is the same, which it is so unless you're providing supplying services, supplying the software to any of those special organizations which have the reduced rate of tax. But that's also doable. That's not a problem.
Yeah, so it's just a theoretical question just on classification, whether it's a better way of doing it, practical way.
I'm not sure how that's going to change anything. It's not probably going to change anything. But yeah, if you pay taxes, government is not going to object to it. And you'll still get the credit. That's clear.
Yeah. One question.
Thank you.
Keval, I want to ask one question.
Yes, Christian, sir.
Yeah, please, sir.
Have you come across the software being treated right to sell goods, deemed sale, transfer of right to use goods, as transfer of right to use goods deemed sale? Have you come across such situation where the government is that it may not be sale simpliciter, but it is a transfer of right to use goods?
Yes. There used to be, sir, where you were giving replication rights
Yeah.
to others.
Yeah.
We used to treat it as transfer of the right to use goods and allow and pay VAT on this. In fact, for these ringtones, once upon a time, most of the ringtones were developed by third parties, and they were giving the rights to the telecom companies to give it to the subscribers. They were also saying we are giving the rights which are in the nature of leases of the software, which are the ringtones to or the wallpapers, the ringtones, to the telecom companies. So yes, we have seen those transactions. They were they were done quite in the normal course of business.
So some of these cases which are still going on, in the case of service tax scenario, they have been treating this as transfer of right to use goods. And hence saying that it is a service. Of course, there are different, like you have a quick heal decision in Delhi tribunal, where they say it is deemed sale. Whereas you have some cases like the 3i Infotech, where they say it's a service. So in the GST scenario, will it make a difference? If it's treated as transfer of right to use?
To my mind, transfer of the right to use is clearly a service.
Yeah.
Whether now the distinction, I mean, once upon a time we would distinguish between a lease and a license, or a transfer of the right to use and a license or permission, which I think is now no longer required. Therefore, the other end of the spectrum is simply going to be a permanent transfer.
Why I'm telling you that EULA, when the product goes along in EULA, that is what a Madras High Court judgment, which is being followed in some tribunal. They say, in effect, that is not a sale. That license is a transfer right to use. Do you subscribe to the view, or it is a sale simpliciter?
I believe it is a sale simpliciter, because either it is a sale simpliciter or it's a perpetual license. Even if it's a perpetual license, then also I would treat it as a sale.
Yes, because a perpetual license is a permanent use.
Yes.
Thanks. Parind, it was great.
Thank you, sir.
Yes.